Good morning, Steve Free in Chicago with the morning grain comments. Well, right now beans are down 12 cents, corn's down a penny, and wheat's about unchanged. Outside markets, stocks are working a little bit lower. The dollar's unchanged, and crude is lower. I think that when we look at the individual markets, first of all, this tropical storm should make landfall Wednesday in Louisiana. It will then move up the Delta and into the southern eastern Midwest and the southeast. Should bring some heavy rains in some locations. The Midwest and plains are dry, and they still probably will remain warm and dry. You've got Brazil and Argentina, mostly dry, some light showers in southern Brazil and northern Argentina. Right now the market's not trading any concern about this dryness, although we are looking at Brazil's futures market at 9 months highs for corn based on the dry weather conditions. USDA announced yesterday some new soybean sales. It's a new marketing year for bean exports, and USDA's goal is 1850 versus 1700 last year. The November-Jan spread remains 17 and 18 cent carry, which suggests that there's a lot of supply out there that could move to the market. The crop was kept at 65% good to excellent versus 52 last year, and there's talk about parts of the Midwest starting to see soybean harvest next week. The China August soybean imports were a record 12 million tons. Through August is 99 million tons, 93 million tons versus 94 last year. If we assume that SEP is 8 to 9 million tons, it would suggest SEP would be 101 to 103 million tons versus the USDA's 111. Again, new marketing year for corn exports. USDA is looking for a number around 2,300 versus 2,250 this past year. East corn continues to hover around the 500-day moving average, supports at 399, while resistance at 416. Just like beans, the Deets March corn spread's at 19 cent carry and continues to widen. 5% of the U.S. corn is harvested. Crop lost 1 percentage point at 64% good to excellent versus 52 last year. There is some concern about European quality of their corn crop, and their domestic usage is beginning to grow. Again, number one feature in the corn is that the continued steep drop in China domestic corn prices could reduce the amount that they import. In the wheat, we got 6.3 million tons exports to date versus, and that's up 34%, versus the USDA's 17%. USDA is looking for 22.4 million tons. Exports versus 19.2 last year. Minneapolis Deets March spread continues to wide out at minus 20, with Canadian beginning wheat stocks come out better than expected. Soft wheat, spring wheat harvest at 85%, when wheat planting is at 6%. And you look at Black Sea prices, nearby markets at $200 a ton, which offers support. But the deferred contracts are 250 to 260, which offers resistance and limits any long-term export buying. So Russia continues to offer wheat a discount for export.